Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, updates, and just general information. I am your huge liability of a host, Tyler Otto, and I'm joined by our only asset, Jeremy Van Groll. Hello to you.
Hey, Tyler, can I be the first one, or maybe I'm not the first one, to wish you a happy Tax Professional Awareness Week? Have you heard this?
You are the first. I did not know that was a thing, but I'm feeling this makes up for the hell that we are all going through right now, just receiving this salutation from you.
Yeah, did you hear this? So maybe we're jumping right into the news here, but the IRS put out the proclamation that this week is the National Tax Professional Awareness Week. This seems like the most self-serving thing that could ever be out there. Like, hey, do you know that fat tire bike riding is voted the best winter sport activity as voted on by the Fat Tire Bike Enthusiasts Club? Something like that. So ridiculous.
This just screams like, okay, you can't do anything that helps us, but you're going to at least spend the time to say, like, oh, we're just going to throw them a bone and just self-proclaim that we have a week of appreciation. No one appreciates us right now. Like, no one is even thinking about it. And also, I'm a millennial, just by when I'm born, and we always get this crap about getting participation trophies. But here's the older generation giving us we're not the one giving them out, we're the one getting them. Please spend your time better, IRS, especially in January.
Oh, yeah. And we obviously love our tax professionals, right? But just self-serving hoopla for nothing here. Wow.
Thank you, IRS. But Jeremy, there's other exciting stuff. Did you have another article here today?
I did. So this is maybe a little dated. Like, we're mid-end January here, but here's a good question for you. It's a new year. There are, last time I checked, still 50 states in the union. How many of them had minimum wage increases as of January 1st?
Assuming there's still 50 states, I know some of them wanted to get out of here, but
we love you, Texas. Don't go anywhere.
You got all our sports teams. What are we going to do without you?
Yeah, that's right.
I'm going to go, I know Arizona's one of them, so there's at least one. I'm going to go with 7.
There are 22 states.
What?
That have changed their, yes, as of January 1st. And there's a couple more that actually later this year have increases. So I won't go through the whole list, but you were right. Arizona's one of them. Do you want to know 2 of them that are not on the list?
Utah and Wisconsin?
Utah and Wisconsin. Oh,
so hashtag
close.
Not our problem.
Well, you and I know we both have clients coast to coast, almost, right? Blessed to be there. So we need to be worried about it. But yeah, just feel bad for maybe our employees or ones that are in our home states that like, nope.
So would you mind, though, really quick, like Animaniacs style, going through and listing them off? Because I would love to make sure our listeners are aware, because I know for Arizona, I was caught off guard all of a sudden that we had to increase the minimum wage for some of those employees. So maybe you trigger either some emotional distress or some knowledge insights for our listeners.
I will. And I also question if you are the level of nerd that you could do the Animaniacs song, because that is a classic one out there that is a
Once upon a time, yes. Maybe one of these future episodes. I'll practice. I'll get ready.
That doesn't surprise me at all. Okay, here we go. Alaska, Arizona, California, Colorado, Connecticut, Delaware, Hawaii, Illinois, Maine, Maryland, Michigan, Minnesota, Missouri, Montana, maybe every state that starts with M. Did I miss any? I don't know. Nebraska, New Jersey, New York, Ohio, Rhode Island, South Dakota, Vermont, Washington State, and Washington, D.C. That's the 23rd. Wow. Yeah. A lot of them out there. So make sure you're checking that out, staying up with the laws.
And remember, a lot of these states, too, like the one that got us in trouble is there's a minimum like effective wage, and then there's also a minimum hourly rate. And this really applies for employees that get sales commissions or tips. Because I know in restaurants, or I have clients that are like restaurants, where they're paying, $5-6 an hour hourly, but then with commissions and tips, they have to true up and make sure that employee is getting $13.85, $14 an hour. So there's multiple minimum wages to know. Arizona is one of them where the effective minimum wage is going from that $13.85 to $14. And so there's complications. If you have staff that flirt with that minimum wage line, this could be huge for them.
Yeah, I still do a little consulting with some new bookkeeper owners or accountant firm owners. And I've always said, like, if you're going to look at payroll as typically one of the more complicated things, right? Just to make sure you have all the accounting right, putting everything in and out. And one of them said, well, like, I just took over these books and they have a sales tax expense. What do I do with that? Or another one I've had, like, the tips expense. I'm like, right away, if you see either of those, realize you got a project on your hands because you got some problems.
Absolutely. And the amount of times those get overlooked, we bring on books all the time where the prior bookkeeper had no idea how to deal with those. So,
Yeah.
yeah, it becomes a mess. So, dear listener, good luck.
Yes.
Jeremy, I want to jump into our first game we're going to play this week. And we're bringing back one of my favorites, which is Accounting Mashup. For those of you that haven't listened before, we are going to combine some sort of pop culture reference along with a trivia question that is accounting based. One example of this would be this Big Four accounting firm loved watching a daytime soap opera that has been running for over 50 years. The answers would be Ernst & Young and Young and the Restless for Jeremy to come up with the answer of
Ernst and Young and the Restless.
perfect. We
Yeah.
understand the principle, Jeremy?
We do.
All right. Question 1, Jeremy. This government operation, which is the subject of the critically acclaimed film Oppenheimer about the first atomic bomb, meets a type of forward-looking financial statement that can detail revenue, expenses, or cash flow.
The Manhattan Projection.
Jeremy, you are correct. And I think this one's valuable to bring up because are you aware of, well, I'm sure you know of QuickBooks' cash forecast projection tool, correct?
I have not heard of this because I right away do not have a lot of faith in any of QuickBooks' tools other than to like nuts and bolts handle the accounting.
So around the time QuickBooks released its QuickBooks checking account, it also released a projection tool, which in theory was great. It would look at all your cash balances, look at the invoices you had coming up, look at the bills you had coming up, and show you projected cash flow over the next 90 days. Problem is like myself and many of our listeners, that thing would just randomly exclude some invoices or it would exclude the recurring payroll you had in there. And so you could refresh the page and get a different cash projection every time. Well, QuickBooks now has a nice little pop-up showing for many users that says as of February 1st, the 90-day cash projection forecast is going away. There are no email alerts, and I reached out to support. They have not sent out any notices about this. The pop-up on a home screen is all people are getting to let them know that they are getting rid of it. And I will quote this customer service rep. They said, "We are discontinuing this feature in response to feedback about the automated forecasting in the cash flow planner."
Like there was one other person using it besides you probably that ever tested it out. Yeah, I'm sure they got a
And
ton
the
of
other
feedback
person
on
complained?
this. Yeah,
Mhm.
right? Yeah. So yeah, it doesn't surprise me, right? But like yeah, if it's not working, get rid of it.
But some of the communities we're in, I know people have used this and shown this to their clients who are super basic. Be in the know, this is going away. Now you'll still be able to see historical cash flow, which was also wrong sometimes. But they say it will still show historicals, it just won't project the future.
And there dashes all of our hopes for providing projections for clients.
Yep. Question 2. Whether January through December or July through June, this is a company's operating period mixed with the Chinese zodiac for 2024.
Oh, I don't know the zodiac. I'm just gonna have to guess. Fiscal year of the rat.
I'm sorry, Jeremy. The correct answer is fiscal year of the dragon.
Oh.
So, and it's apparently the dragon changes over time. I am not going to pretend I'm an expert. No one hate on me for not knowing everything about other cultures, but it's the wood dragon. So I'm a woodworker. I'm all about it. Maybe I'll make that my goal this year is to make myself a wood dragon in
There you go.
commemoration. We'll hang it right here.
Here in Wisconsin, there are dragons. There are dragons.
If we can get to 2,000 subscribers, I'll raffle off the wooden dragon. We'll make one and raffle it off.
Ooh, I love it. Can't wait.
Jeremy, question 3. A top 50 film of all time, according to IMDb, with Sigourney Weaver fighting off ETs while trying to perform a year-end count to true up this asset account.
Alien inventory.
That is correct, sir. Alien inventory. And I bring this up because we are right at that time where a lot of our clients, they may have inventory on the books or never had it, but they haven't done the count. I'm curious, do you have many clients where this year-end true-up will throw their financials, and how do you go about it?
Yeah, we have a couple that do have inventory. One of them actually is a cool business model where they get all the rejected items or returns from Amazon and Walmart in the area. And then as long as they give them out or sell them extremely discounted to other nonprofits or teachers or education or church organizations, they can do that and then keep the difference, right? But they have to store all of it and have this huge warehouse of all these things, right? So We have gotten a better way of estimating that inventory, but you can imagine like we're just doing a pallet value, right? Because they could get junky like fidget spinners from China or like actual China that you would put on the table, right? So that one is interesting. We have some thrift stores too, some of which do accounting or actually do account for inventory same way. It's kind of best guess on things on values, but other ones they actually do not have their inventory on the books, and the auditor has defaulted to a modified cash basis statement. And like I'm pretty big fan of that too, because a lot of these, if you've ever seen these thrift stores that take donations, we've been to one and I volunteered at one where they had a 20-foot tall stack of garbage bags full of clothes donations that they get through maybe 20 of those a week, right? And just to try to estimate that inventory would be ridiculously complicated.
The nonprofits I were with, we would do by bin, right? Because you have all these trash bins that people just show up and dump stuff in. We'd sample 50 bins, value everything in it, and say, all right, every bin the rest of the year is worth $82. And we'd just run with $82 per bin. And that is the cost of donated in kind that came in, what went out, and then do inventory counts by racks. We just say, oh, here's all the ski helmets. Here's all the clothes. The rack is about $100. Great. Let's value it at 100. So, but getting that in can play a big difference in that tax return for your clients, especially if they're on accrual basis. So, dear listener, you're still in January. You got time to figure this out. Last question for you today, Jeremy. A journal entry made at the end of the accounting period whereby data is moved from temporary accounts to permanent accounts in the title of the Simpsons Halloween episodes.
Oh, adjusting entry House of Horrors.
Well done, sir.
Yeah.
Way to pull that one off. And Jeremy, I wanted to bring up adjusting entries. I mean, Simpsons Treehouse of Horror, also just great episodes. We could riff off of that for a while. But I wanted to bring up adjusting entries because I've seen on the local communities of bookkeepers, whose job is it to do the closing entries? Do you believe it's the bookkeeper or the tax preparer?
I'm the bookkeeper. I want to do those so I understand them. Like even if the auditor looks at it or the tax preparer thing and they may have a different take or adjust it a little bit, at least you, when you provide that preliminary report for the end of the year, it is relatively close to what they should end up on. Yes. I want to do that.
I'm right there with you. I think I love to do it all myself because I want to know exactly what's in those books, and I want them to be closed come February 15th when we close all our clients' books. I don't want to be waiting around till someone does either the tax returns in April or files an extension, and then we got to make sure we do adjusting entries, closing entries later. I want it done when we close the books, but I know a lot of firms that disagree. So feel free to hate at us on LinkedIn if you disagree. I'm a big fan of doing it myself.
Yeah, I am too. There's certain things where I will default to their tax preparer and auditor if they're going to do accelerated depreciation or if there is some kind of revenue recognition or leases. Like I do not touch leases if I can help it with a 10-foot pole because some of that lease accounting is ridiculous. But yeah, that year-end stuff, I want to handle that.
Jeremy, 3 out of 4, and all you really missed was the Year of the Dragon. Congratulations, sir.
I was thinking I was batting 1,000, but yeah, I didn't know the dragon. I'll take that.
Well, Jeremy, with that sound, it is now halftime in our episode, and this is the time where we head to the benches and get ourselves a nice little app snack where we're going to take a bite out of today's app. And would you like to tee off who is today's app?
Yeah, I would. So today we're going to talk about Gusto. So if you're not familiar with Gusto, they are a full service payroll providing entity that can do all the payroll things for your clients, right? A couple of things I like to say off the bat with them is first of all, like the interface is nice, right? And they are full service payroll. So like if you are on any of their plans, which I think we'll talk about in a little bit, they are going to do all the tax filings for you. They are going to put the W-2s out there. They're going to pay your payroll taxes. They're going to have all that compliance stuff out there for you, both on the federal and the state level, as long as you give them your entity numbers that you need so that they can do that and then sign off that they have the authorization to make these payments and do the filings for you. Yeah. And overall, like it's just a simple tool, right? And I'm not trying to say that derogatorily. Did I say that right? Wow. I think, yeah, I'm going to take some.
If not, I know what you meant. So it's a word.
I'm going to tell you, I thought that was a big word. I might have used right. But I've gone into certain organizations where they have used much more robust payroll tools and not needed it. And everybody's confused, right? Like this does not work well and it's complicated and all of that. Very rarely ever hear that with Gusto, that it's a nice user interface. It's relatively basic. It does 90% of the payroll things, maybe not the super complicated. If you have like some adjusting or multiple rate scenarios, really complicated benefits, things like that. And like we have an account manager that serves us very well with them, and definitely going to be our payroll tool that we prefer, at least in the short term here ahead.
No, I completely agree with you. My opinion on Gusto is it does what you need it to do. It is a simple interface. My clients that I've got in there completely understand how to use it. It works, and they force you into compliance on a lot of things where other softwares don't. QuickBooks in particular, they force you into paying the right taxes, get everything done. Honestly, the biggest complaints I have with Gusto that a lot of people have is customer service isn't always great. If you get a good account rep, you can do a lot of things. The general customer service, they're not prompt, they're not super robust, but at the same time, you got to play within their rules. You've got to be able to submit things on time. If you don't review the W-2s before the end of the year, and on the 28th of January, you say, actually, this employee worked in a different state, you're going to be thrown to the back of the line, and it's going to be a while till they get it fixed. So like there is an element to your emergency is not going to be their problem. Like they throw you at the back of the line, and if you freak out at them and you want something done immediately, they're going to say tough. That's a hard nature of this business. If you play within the rules of Gusto, it's still been my favorite software. And the accounting partner perk does not suck. I put clients on it. I don't charge them any fees to manage the payroll integrations, do the mapping, all of that, because we get money on the back end from referring so many clients. And that's kind of our compensation. So it's been awesome for that. With the pricing of, on their simple plan, $40 a month plus 6 per employee, or $80 a month plus 12 per employee. It's been great. And honestly, I still can't find a better software that allows me to get the reports I need, force the client into compliance, and also map as well as I want to QuickBooks or Xero on the P&L. Like QuickBooks, in my opinion, doesn't make it as easy to map to the P&L as Gusto does into QuickBooks. For that reason, I'm a big fan. I know there's some people that can't stand it. And Jeremy, you and I talked about it several episodes ago, but they updated that feature now where if your client has a bounced payroll, they used to put you on 4-day payroll, non-negotiable. Now you can pay a fee to get out of that. And I think that's gone a long way with helping a lot of the users. So again, we're not getting paid by Gusto. We're not getting any sort of compensation. We're talking compensation. We're talking through the apps we like. And this is one, but you got to know how to use it and you got to play within their rules. Would you say that's a fair assessment?
Yeah, I would agree. We will take compensation, Mr. and Mrs. Gusto, if you want to provide that. Yeah, I agree. I think to support, I completely agree with you. Usually is good, sometimes struggles, and same thing. Like your emergency is not their problem. Also, I think it was a year or a year and a half ago, like they proactively at least had our account manager and said they were doing it broadly, that they knew their support had gone pretty bad because they grew so fast, right? Like they had a ton of just onboarding and didn't have the support staff to support that, and like flat out apologized, say we're going to try to do better, et cetera, which was helpful for me. And I think it has gotten better from that point. But yeah, same thing. I like their partner program. It puts a little jing in your pocket. Do we make thousands of dollars off of it every month? No, but it's just nice to know that, hey, we're doing some work on the front end. We're getting customers your way. It's nice to have some return on this side too.
Yeah, I think right now I'm getting like an extra $600 a month from having all my clients on there, which does not pay for the fees of all the clients' time we spend in mapping it. But once we get everything set up right, then it over time pays itself off. And I charge my clients $0 for that. I say, hey, we'll help you with payroll at no cost. So I'm a fan of that. And again, it makes my life so much easier. So big fan. Way to go, Team Gusto. And no, none of you can have the name of my rep because he's mine. You can't have him.
Oh, maybe for a fee. Again, we're for sale here, people. No.
No, this is very true. We are so corruptible.
I love it. All right. Why don't we move on to our next game here? I want to talk a little bit about our preferred profession and the compensation that should be associated with it. So we've talked to how it's been a difficult market for labor in the financial services industry, right? Like just people aren't out there taking these jobs. So what I did is I did a little research on this, just wondering typical roles within the finance world on how much they would make and then compared to other roles in the financial world. So Tyler, I'm going to give you a list of 5 financial roles, and I would love it if you can take a stab at ranking them based on the average wage as provided by U.S. News in order from the lowest to the highest compensated roles. And for our listeners, while you're thinking, I will give you this in the order I provided to you, which obviously better not be the right order or I suck. So, financial advisor, a bookkeeping clerk, financial manager, accountant, and financial analyst.
So I'm going to go bookkeeping clerk as the lowest.
All right.
And it's a financial manager, not a finance manager. Okay. I'm going to go accountant next. And not that I think accountants don't get paid much, but I think that term gets thrown around in corporate America a lot for someone that has no experience. But I know a lot of those companies, they hired accountants that had no experience and they worked in a job that had no relation. That was like the entry level title. So I'm going to go bookkeeping clerk, accountant.
I agree. Like we have a newer client out there and we are signed on to do more of their controller or accounting manager work and assess that their team is doing well. And they have an accountant on their team. And I feel like that has gotten thrown around pretty loosely based on skill level that could go. You could have very high level accountants and you could have newbie out of college accountants.
Companies that aren't tech savvy, they get QuickBooks and they're like, well, we need someone to run this. So they bring in someone that's like, oh, I've logged in there before. And they're like, great, you're our accountant. And like, that's their official title. So dear listener, what's left is financial advisor, financial manager, and financial analyst. So I am going to go analyst is the next lowest, followed by advisor. And I'm going to put manager at the top.
So to review,
bookkeeping clerk, accountant, and then the financials, analyst, advisor, manager.
And you are 100% correct, sir. Nice
work.
Yeah, take that. So now that we've said that, I think we talked to a lot of these roles. Let's look at estimates. So this is nationwide, estimated average salary for each of the roles. So the lowest one was bookkeeping clerk. What do you think the average salary of this is? And you can't lose at this point. You already got all 5 of them ranked right.
Dude,
so
I am pumped. The adrenaline that's going from getting this one right, like, man, get that dirt off my shoulder. I'm going to go 38.5.
All right, this one is 47.4 for the average bookkeeping. It does say bookkeeping, accounting, audit clerk. I just put it down to bookkeeping clerk, but yeah. Then accountant.
Accountant. So knowing that was 47, 48, whatever you just said, I'm going to go 54.
86.7.
Whoa!
So average accountant salary nationwide, domestically, 86.7. And you think about that is a pretty decent wage, right?
Yep. That, to quote Ron Burgundy, that escalated quickly.
Yeah, right? So, I mean, the fact that we're seeing so many people not be in this field, that's a decent wage that you're making there. All right, next one. Financial analyst.
Financial analyst. So I got underpaid when I had this title then.
Amen. Me too.
110.
Very close. 108.9. So yeah, right under 110.
Yeah, I'm feeling good about that.
Yep. All right. Then financial advisor. So I was a little surprised they lumped this together because this is a different role, right? Like financial advisor, it depends. Like you could be a financial advisor, I guess, at a corporation. But if I think financial advisor, I'm thinking your TD Ameritrade and your... What is the one that's always in everybody's neighborhood that I can't think of? The investment firm.
Fidelity?
Yeah, Fidelity's another one. No, Edward Jones, right? Is that another one? Like they have like a little shop and every little side malls and all that. And
every strip mall has one.
Yeah, right. And you are getting advice as an investor by a financial advisor. That's what I feel like this role is. So it doesn't seem to fit with the rest of these, but that's what they had lumped together. So I went with it.
I'm going to go $132,603.
$137.7. So also really close.
Yeah. I'm feeling good. Yeah. I'm crushing this one today.
I'm also just intrigued on that one, how much of that is like normal wages and how much of that is commission that they get from things.
That's a really good point because, you're going to get a lot of commissions in that job.
Yeah. Huh. All right. Last one. Financial manager then. Top of the heap.
I'm going to go 171.
166. So, so range was under 50 to over 166. And this is the average salary. So like 50%. So these can go up from here. So I thought it was just interesting thing to look at is, again, not something that is a growing field overall, but you got to think that those wages are pretty comparable to a lot of other ones that are out there, or favorable to a lot of other ones out there for white collar workers, right? Yeah. And I'm not talking like you get into lawyers, data analysts, doctors, things like that. Things can go crazy from there, but overall get relatively well compensated.
The thing that kills me is we look at all these wages. Like, I agree. Like, there's the accounting shortage is real that everyone's talking about. We're having a hard time finding people. Wages are going up just to try and find competent people. At the same time, I don't feel like business owners feel like they should be paying more for a bookkeeper than they did in 1992. Like they still feel like it should be 50, $100 a month. When you say $300 a month, they're like, "What are you smoking?" It's like, dude, QuickBooks' robot is $350 a month now. Like it
Yeah.
just doesn't make sense anymore. And so yes, wages are rising just like everything else. My attorney sent out a letter and it's like, yeah, our billing hourly rate just went up like 18%. Every
Yeah.
wage is going up.
The second question, my story, real quick story time is like just today or yesterday, I had somebody who I even forgot we had access to their books take us off of their QuickBooks account, right? So you get, hey, you have been removed from this person's QuickBooks account, right? And we're like,
Oh yeah, that guy.
yeah, I haven't talked to them in years, right? That's fine. So I talked to my sales guy and be like, hey, good chance to reach out to them, right? And just say like, hey, so you took us off. We did like a year of cleanup for them, probably 2 or 3 years ago, and they just never took us off. Right. Fine, great. I don't have a problem with that. But then I had the salesperson reach out to him and he messaged me in Slack earlier today and said, yeah, touch base with her. She was appalled by our fee of $1,800 to clean up their books for that year and doesn't feel like this will be the right fit for them going forward. And I was like, I was pretty generous, I feel, with that. And they weren't super hard. But if you do that, it's $150 a month or whatever it is, right? Like, I don't know. I saw that and I'm like, that is clearly not another follow-up you need to make there. We're cool.
Especially because you see in a lot of these groups, like people are getting multiple 5-figure cleanups a month right now.
Oh, yeah.
And I mean, us personally, like we finished a $14,000 cleanup where it's like, yeah, monthly bookkeeping fees would be $3,000 to $4,000 a month for you. So you're a $36,000, $48,000 a year client, and we're going to do an entire year cleanup for 14 grand. Yeah, that's you got away a lot cheaper than hiring an employee last year. Like,
yeah.
How does this not justify? But so many businesses just don't get it.
Yeah. Another question for you that I don't think we've talked about before, as far as like out of scope work that you're doing for a client. So we charge them an hourly rate for that, right? Do you have a matrix based on the role within your organization of how much do they get charged? Or do you have like, here is our hourly rate and it's this, regardless of Tyler does it, or if Jenny out of college, our first hire that I stole from Jeremy from Wisconsin, is starting this project?
So first of all, Jenny now runs this firm. I'm just a figurehead. So thank you for letting us poach her. Second of all, no, it's by who's doing it. So if it's an entry level person, I bill lower. If it's one of my account managers, I bill higher. If it's my time, in advance because I'm not doing the work unless we have a signed agreement. I bill my rate right now around $350. And yeah, like you can't give up that time for fee because the more you grow your firm, the amount of requests that just come out of the woodwork. You and I have a Marco Polo chat going on about this all the time. The amount of people that come out of the woodwork just wanting 30 minutes. Like I could fill up an entire day a week with the people that want 30 minutes of my time.
I proposed that to our team of going to a matrix like that. And it wasn't like, it met some kickback on both complications of billing and communication of it and whatnot. So we didn't do that. We're still doing a same fee. I think I was shooting about the same, like $250, $300 for my time. And then here's the senior account manager, accountant, bookkeeper rate, stuff like that. So we didn't land on that for this year, but I'm going to take another swing next year and say, I think we need to do this because I feel like we're leaving money on the table and not valuing some of our people's time high enough, right? Like maybe we're overcharging for that bookkeeper role. It's washing out, but how often are they doing the out of scope things anyway? Like that role typically is following your normal procedures and doing day in, day out, categorizing things, reconciliations, all that stuff. And it gets that higher level work. It goes to those of us that are a little further up the food chain.
Absolutely. No, great questions.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, Jeremy. Little bit of a theme this week for the new year. We got a little tax, but I tried to make it easy on you. Are you ready?
Ready as I'm ever going to be, yes.
All right, start the clock. Question 1. What is this non-zero number? What is the number of days you can file an extension for submitting 1099s?
90 days.
The air date of this episode, January 18th, is National Winnie the Pooh Day. How many acres big were the woods that he lived in?
It's the 100-acre wood.
What is the dollar value penalty for failure to keep copies of returns or lists under IRC code 6695. Hint, Nicolas Cage can also leave you this quickly.
$90.
A perfect multiple of the last answer you just gave. What is the penalty for failing to comply with due diligence requirements when filing taxes?
Like the correct answer of the last one, or what I actually gave?
Yep, correct answer.
$900.
The NFL playoff picture is set. How many NFL teams make the playoffs these days?
14 total.
What is the minimum age requirement for a PTIN application, a tax preparer identification number?
21.
Because we love Ryan Reynolds and he's taking over QuickBooks Connect and everything else in the world, which installment of his Deadpool franchise is coming out this summer?
Deadpool 3.
What is the minimum distribution age now for 2023 taxes for retirement plans?
78.
How many seasons of Survivor have there been on TV?
Oh, God. 12.
Within 15%. In a recent study by Numeric of 1,000 accountants, nearly what percent of tasks are completed after 7 p.m.?
Ooh, 30%.
All right, Jeremy. How are you feeling after that?
I feel like a lot of those questions about penalties are not even close, the amount on that. But I like that last question. I'm interested in that answer.
All right, let's dive into it. First question, this non-zero number, what is the number of days you can file an extension to submit 1099s? You said 90. The correct answer is 30. And Jeremy, I'm actually surprised by this because I actually wasn't even fully aware, but Form 8809 allows you under certain conditions to file an extension, one of which being the filer was in their first year of establishment. So if you have a new client that dropped the ball and you're near the end of, I don't know, whatever season, you can request this. Now, it's not for you to go willy-nilly because you haven't done the work during the year. You know, the other things are you have to have like some sort of fire, casualty, some sort of catastrophic loss, something else that causes it. So it's not going to be instantly approved, but you can get up to 30 days extension.
I was not aware of that at all either. So thank you for that. I was today old when I learned that. But I feel like you could manipulate this, but like what kind of casualty? Like my cat died. And so I was very distraught and I couldn't do 1099.
It's weird that Jeremy buys a new cat every year.
Right around January. Weird.
Yeah, odd fact. Question 2, the air date of this episode is January 18th, National Winnie the Pooh Day. How many acres big is the woods he lived in? You are correct, the 100-acre wood. What is the dollar value penalty for failure to keep copies of returns or lists under IRC code 6695? Hint, Nick Cage can leave you this quickly. How quickly can Nick Cage be gone, Jeremy?
I have no idea that reference. I feel bad.
What?
No, what?
Is there a movie where he stole cars and he was gone?
Oh, gone in 60 seconds. Stop.
Correct. The answer is $60 for each penalty for not keeping all the documentation you need for preparing your client's taxes. So $60 penalty. The next question, a perfect multiple of the last answer. What is the penalty for failing to comply with due diligence requirements? You said $900. I'm going to give you half a point because you did the right math.
Oh, it's $600?
It's $600. So if you do not do all the due diligence on that form, your due diligence checklist as a tax preparer, for each instance, that is a $600 penalty. That can add up, especially if they audit you on one client, find an issue, audit the rest of them, and see you filled out something wrong. That can stack up quick.
Oh, yeah. That's not a chump change either. Yeah.
Next question, Jeremy. The NFL playoff picture is set. How many NFL teams make the playoffs these days? You said 14. Correct, sir. You get 7 on each side with a first round bye going to, who is it this year? The 49ers and Ravens?
And the Ravens, yep. Packers snuck in. We were actually on the game. I blessed to be at the game last week where they came. That was
with
awesome.
A Utah boy at quarterback.
Oh, yeah. Yeah. Love it. Love's there, man. I forgot he's the Utah man. That's right.
Utah State. I mean, he's not my Utah guy, but he's a Utah guy.
He's the Utah guy, yeah.
What is the minimum age requirement for a PTIN applicant? You said 21. The correct answer is 18 years old. And aside from being a U.S. citizen and not having a criminal background, there's not much else you need to get that PTIN.
Oh, yeah, and make sure you've renewed it, too, if you haven't yet, right? Isn't it due at the end of January? I think you can renew it through then, or maybe it's expired already. But I know I get that email and do it immediately, so I'm like, I'm gonna forget to do this. I'm also surprised at that because I was debating between 18 and 21. Right, I know it's one of those two, but I'm like, I would want a little extra time for my person to know what they're doing to be able to, like, the National Revenue Service, right, to accept them. But apparently not. Nope.
Well, and 21 would make sense because that's when you can start drinking. And that's, when you start doing taxes is when you want to start drinking. So it really feels irresponsible for those to not overlap.
Yeah.
Jeremy, question, you answered 3. Because we love Ryan Reynolds, which installment of the Deadpool franchise is coming out this year? As I said, you said 3. Correct, sir. Not only is Deadpool 3 coming out, but we have Ghostbusters 5, Gladiator 2, Planet of the Apes number 10.
Oh, God.
Furiosa, a Mad Max movie, which is number 5, Dune Part 2, and Bad Boys Part 4. Who says there's no new scripts in Hollywood?
Yeah, right? Funny story. I was on the few times that I flew internationally, I was on a plane ride back, and I'd never seen Deadpool 2. So I put it on, and it was like a half an hour into the movie, and I'm like, this is not that good. And then I realized, like, it was totally censored. Right.
Censored.
Like there were, yeah. And I was like, this is not that good, like near as good as the other one. And I'm like, I finally looked closer and I'm like, oh, it's all censored. This is trash.
Was it 12 minutes long? Was that your first hint?
Yeah, right. Wait, that was over. What happened?
Next question, Jeremy. What is the minimum age distributions now for 2023 for retirement plans? You said 78. I'm sorry, but the answer is 73.
All right.
So if someone turns 72 this year, they get out of it. And the age is increasing the next couple of years. So like you can ride this very close, but not having to distribute over the next couple of years. But if you turn 72 this year, you're cool. How many seasons of Survivor have they been? I asked you this just because I was on Netflix last night and totally had my mind blown that there was a new season available on there.
Too low by far, aren't I?
Yeah, it was season 45.
Wow. Okay.
Talk about a franchise that survived. Jeff Probst is out there just paying for vacations for himself left and right to all these gorgeous places while torturing people.
And he's still he was the original host and still doing it?
Yep, wow. He's the original host. Well, he's executive producer now. He pretty much owns that thing, it seems. But you got to believe, like, if y'all looking for a tax strategy, find a way to not pay your staff at all. Have all your actors be for free, expense every bit of you going to these gorgeous places, and you get free entertainment. Like, the guy's figured it out from a tax perspective.
Yeah, absolutely. Good on you.
Last question. Within 15%, according to a recent study by Numeric of 1,000 accountants, nearly what percent of tasks are completed after 7 p.m.? You said 30%. The correct answer is 34. So yes, you are within your window, which blows my mind that nearly 1/3 of everything we do happens after hours. Now, this begs the question, they didn't get into it. Is it because a lot of the people using numeric software are side hustle bookkeepers and accountants, and so therefore they're doing it after their normal jobs? Or, as you and I probably suspect, that's the time of day when your clients and employees aren't bugging you and you can get stuff done.
I thought the same thing right away, which was I was interested to hear the answer in this one. And 2, but I've also had like CPA firms who I know are too big to be using that software and get a lot of things from them at night too, because the timing and seasonality of the role can be taxing. Taxing. Got it? Accidental humor. Yeah.
And the other interesting thing about this article is they looked at days of the week. So the least amount of productivity or the least amount of things getting marked off, 3% over the weekends, which I'm happy to hear, but only 11% on Friday and 14% on Wednesdays. The majority, almost 25%, both on Tuesday and Thursday. So nearly 50% of all tasks get marked off on Tuesday and Thursday.
Yeah, I'm not surprised. I am very not motivated on Fridays. I don't know what it is, right? Like, even I would work a Saturday and I seem to be fine. I know that's happening, but it seems Friday afternoon, I'm just like, nope, we're good here. I need to do something else.
So I sent this article over to our boys at Keeper because I'm like, you guys could probably pull this as well. I'm super curious what you see from all of us.
Yeah, that would be cool to see. That's a good call.
We'll see if they do anything. If anything, maybe they'll let us release these results on our podcast. Jeremy, 4.5. That's right where I want you to be. Perfectly mediocre. I'm proud of you, man.
Yes. Thank you.
And with that sound, we have our winner of the week. And Jeremy, would you like to tell us who's sitting atop the podium?
I would, and I'm surprised with some of the information we have here that we've gone some like full circle continuity in this episode, and like, wow, that's impressive. I'm going to say winners of the week this time, investors. So, like, they're ever since the COVID incident, right? Everybody, they're like, economy is going to be crap and doom and gloom and all of this, and we still seem to keep chugging along afterwards, right? So there was a whole bunch of people beginning of the year said returns are going to be bad, take your money, get it out of the market. Dow Jones was up 14% this year, S&P up 23%, and NASDAQ up 43%. So you had some money in the market over 2023. Probably feeling pretty good about that.
That's awesome. And loser of the week, you and I found a similar article. I'm going to let you introduce it. But this was one of the highlights of my week. We lost some street cred, if you will.
Okay, I'm not sure where you go with that, but like, go ahead.
We're not hip. We're not rad.
Oh, yeah, you're right. I was never hip. Maybe it's just got that. But yeah, recent article came out that you should expect as a tax filer to pay at least 20% more for the fees for your tax filings because of the lack of accounting professionals out there, which we talked about before, even though they get paid decently. But the hip kids coming out of college aren't doing this because accounting is not cool.
I love that headline. Accounting all of a sudden is deemed not cool. Not all of a sudden. It's been that way for a while. But the fact that this is still breaking news of Finance Times, that accounting's not cool and nobody wants to go into it, it doesn't surprise me, especially with all the cool new tech and tools out there, or you can go make money being an Instagram influencer for some of them, and the rest of them are going to chase it. Yeah, accountants are getting scarcer and scarcer by the day.
Yeah, but more like if you are one of them, then increase your value, right? Increase your prices, all of this. Even if you don't have a team yet, you need to understand that you are now a more scarce resource out there, and so can garnish a higher wage or call for a higher wage. But the other side of that is you're going to have to pay higher wages too once you do have a team. So a little bit of two sides of that coin.
No, but I think the beautiful thing to highlight here is so often accountants, they're like, they want to get into the industry and they'll have a few first of those prospects they talk with that are just appalled by their price, right? Like you and I said earlier, they're appalled. And so they feel like they need to bring their prices down. No, let that person that's freaking out over a $300 tax return, have them go shop elsewhere. They can find garbage if they want. You should be charging $600-700 for that tax return. You should be charging minimum, if you're doing easy bookkeeping, $350 a month for quality service. If you're cutting a lot of corners, maybe you can make it work. But like, don't make your clients freaking out your problem. Increase those fees. And I think it was actually Ben Robinson who once said to me, like, if at least 20% of your prospects aren't freaking out of your price, you're too low. Like, you want 20% pushback.
Yeah, absolutely. Like, get out there, be aggressive with it. And when, like, it is still hard for me to hear it after so long too. Like, you're too high and we're not going there, but just get it normalized, right? That's cool. We're not the right fit. Move on.
Well, Jeremy, that's all the time we have for this week. Important announcements to come, a couple guests coming up in the next 2 episodes, and maybe even a new sponsor. Like, we might be doing things here.
Ooh, maybe a first. Like, I've done something.
I know. Like, we might actually have a quality show. Who knows? Thank you. Like, other moms are listening now, besides just ours.
That's right. Come back, moms. Subscribe. Hit that button. We'd love to come back every other week.
Well, until next time, enjoy your hell of a tax season, and we'll talk to you soon.
Sounds good.